Welcome to the second hour of Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have David Jensen with me again to bring us up to date on what's going on in the precious metals markets. What is going on in the real markets for bullion as opposed to the fake markets, or the what I like to refer to as the fraudulent paper markets in New York and London. Welcome, David. Good to have you with me again.
Thank you, Jay.
I'd like to start out, well, with the normal thing that we usually ask you about every week. We've noticed a growing increase in the disparity between the price for the real physical metal and the futures prices that you see quoted in New York and London, and especially in the platinum and palladium and silver markets, less so in gold. Where do we stand this week with palladium?
Palladium is standing at about a 16.8% premium in Shanghai versus about 18.2% last week. So down a bit, but still a strong premium. And silver now we're seeing it at about 11.8% premium versus 11.4%. So silver continues to creep up from about 2.5% premium at the beginning of July. And just to note here that these prices that are posted for these exchanges in Shanghai include a VAT tax. And the reason that we include them in the prices is that is the price that is paid for metal on these exchanges. And it is that price which creates the draw of imported metal through smuggling into China, into that market. There is also a very large amount of silver being produced in China, and that's why I think that we are really keenly following the drop in the inventories of the exchanges in Shanghai of the physical metal from 1,180 tons a year and a half ago down to 95 tons today. So, overall, the reason that we're following physical and following these premia is that the physical market appears to be on a collision course with what I call fiat gold or fiat silver or other precious metals, in that the spot contracts which are traded are not really the metal themselves. They're just printing contracts, printing futures and forwards and swaps, and then trading those on the market. So we would expect that this to cause mispricing because there is metal available to market which is not really there, and then you have shortages at some point because of the price is not right. The market is not setting the price to attract significant or sufficient production of the metal to market.
Mm-hmm. Well, certainly palladium has been the winner, so to speak, in terms of the disparity, the premium between the paper and the physical markets. We're talking about the Shanghai markets, I guess, and platinum also is quite large. I see your notes here to me, 6.4%. That's down a little from last week's 7.4%. Yep. But gold seems to have crept up a little bit. Possibly it's at a slight premium.
The thing is that with gold, there's very, very large above ground stocks of the refined metal. For silver, palladium, and platinum, it's not so much. It's just a fraction of the annual consumption of the metal. So it's roughly at the annual consumption to a fraction, depending on which metal that you're looking at. But there's nowhere near the above ground stocks of those metals. What could be the game changer is the new free trade zone gold market that's opening up to allow the exchange of yuan for gold. And the Chinese have been very clear that their intention. I saw a Bloomberg article there last week that you and I chatted about, Jay. That that the intention with the free trade zone. And this is a quote I'm going to read if you have a moment.
Yeah, sure.
It is from the chairman of the exchange. He says the free trade zone gold trading will boost use of the yuan currency, provide a platform where onshore and offshore currencies can fuse and trade together, and help pave the way for the yuan to become a global currency, said Zhu Luod, chairman of the exchange. I just continue on one more sentence. We're also attempting to be a hub where gold can be traded here and then shipped elsewhere with a vault and other services in the free trade zone. So, I mean, they're very clear what they're doing here is that they're trying to boost acceptance of gold by making it interchangeable. Boost the acceptance of the yuan
Mm-hmm.
by making it interchangeable with gold.
Mm-hmm.
And this is historically, in the past millennium, when there have been global currencies that have been utilized for trade, whether it was the Spanish milled dollar, the British sovereign, the U.S. dollar. They've always started out as proxies for gold or silver. They were just units which were exchangeable, and that's exactly what the Chinese are doing here.
Mm-hmm. And would you say that that is fitting into the picture for the BRICS then too, as a whole, because they're talking about unifying and trading together as a common market, if you will?
Yeah, it has been very interesting to see. It's almost as if a lot of this policy, although the BRICS movement as a whole has been planned for a long time, a lot of it recently has been on the fly. The discussion of the currency between Russia and the other two Asian nations that was mentioned a few months ago. Discussion about Russian ruble and gold and the yuan, but we see things focusing now onto the yuan and the yuan interchangeability, and I think that is going to be the let's say the first medium for transitioning to a dollar alternative, for international trade.
Mm-hmm. Well, certainly, we're seeing the Russians pushed more closely to economic ties with China. I notice the major Russian oil company now working a deal with China to supply China with oil. We had the gas deal earlier. I met with a company this last week who has a piece of a very major world-class copper-gold deposit where there's early stages of exploration, some 12 million ounces of gold and a couple of billion pounds of copper. It's a phenomenal story, and there I understand there's a great deal of interest from the Chinese, as it's near the Chinese border in Russia, to acquire this asset by the Chinese. It seems to me that would, again, there's gold in the ground and it's not out right away, but the Chinese have been acquiring a tremendous amount of physical gold. That's my understanding, and that's yours as well, I believe, right? Can you talk to that a little bit, David, in terms of the total amount of what is your sense of how much gold the Chinese have been importing? And I think that Jensen or somebody you follow very closely has done some work along those lines. Do you have a good sense of that?
Quite frankly, I don't, because it's opaque. And but I would not be surprised if they'd accumulated more than, let's say, 15,000 tons of gold in country, because there's been a real focus by them for more than a decade to accumulate physical metal, and it seems that at the elite levels there is an understanding of the value of gold in terms of underpinning currency, and really that is currency, that is money. Mm-hmm. But the majority of the Bill Fleckenstein calls it bubble vision, but I mean the people that follow the financial networks and certainly the fund managers with whom I talk are really disconnected from an understanding of monetary history. Mm-hmm. But the Chinese have a much longer perspective, and they're students of history. Mm-hmm. And I think that there's an understanding that you have to, and they're really being forced by the market as well, because certainly there is a perception issue of, well, why would I want all these yuan, right? Once I've sold you my oil, what am I going to do with the yuan? I can only buy so many Chinese manufactured goods, and then I want my money for other things. But what they're doing is really returning to a gold monetary system, which was finally abandoned by America in 1971, but which was really initially destabilized in 1913 with the creation of the Federal Reserve and what they called flexible money.
Mm-hmm. Yeah, you mentioned, David, the elite understand that gold and silver is money. Are you talking about the Western elite as well as the Asian elite?
Well, certainly. I think if we look at the systematic removal of the U.S. dollar from gold backing, And I mean, Paul Volcker, who admits to being the major proponent or driving force behind the suspending of gold convertibility in 1971, that he and David Rockefeller, who is the CEO of Chase Manhattan Bank, Henry Kissinger, George Shultz, even they were all lobbying for decoupling of the dollar from gold. And if we look at their at their political affiliations, they are all CFR attendees, Council of Foreign Relations, and even more notable perhaps is the Bilderberg attendance at the Bilderberg meetings. Paul Volcker, although he initially denied it, I mean, he was an attendee 3 or 4 years ago at a Bilderberg meeting. Mm-hmm. And these, I mean, the Bilderberg Group was really created by David Rockefeller and the Rothschild Banking Group. And what the goal is to really centralize global control which is really centralized planning, but to put a global corporate elite in control and to really destabilize the nation state. Mm-hmm. And if we take a long-term strategic view, which one has to do in these matters, we can see that moving to flexible currency, quote unquote, and still saying it's as good as gold, and then FDR taking gold out of the hands of the American people, and then finally, Volcker and Schultz and Rockefeller and Kissinger successfully removing the underpinnings of the dollar. What they did was really they knocked out the foundation, and it takes time because of inertia and perception. But the destructive impact of unlimited money creation and it can't once you've chosen to continue on that path. So we have all these other economists talking about you just need to print more money, and the concept of Keynesianism as a backdrop to why you can print wealth and steer the economy. But you just have to look at the systematic decoupling of the American currency from gold to really understand that there's a need for that. There's a perception of the need, and there's a push for it. Mm-hmm. And it allows runaway government spending. It allows you to fight wars and not have the money for them, and to inflate away the debt afterwards. It allows you to blow enormous financial bubbles. But the political affiliation of the group who really pushed to get America off of gold really is one of globalist corporatists. Mm-hmm. Who don't like the American Constitution and don't like the, what that stands for, and don't like gold money in the hands of citizens because they can make their own choices then.
Right. Yeah, no question about it. I mean, I think you, in your notes to me, you noted that long about the time in 1971 when Nixon took us off the gold standard, or maybe later on, by the time 1980, when the gold price really rose from a low of $35 at the start of the decade to $850 at the end in January of 1980, there was something like a six-fold increase in the amount of money printed compared to the gold backing that we had. Where would you think we would be today, David, if we tried to say how much gold does the United States have to back the amount of dollars that have been created out of nothing?
Well, we don't know. There's been no audit since the 1950s. The six-fold increase in the U.S. dollars, was up to the point of Nixon's default, which is what it was in 1971. Okay. So that's what forced the default, was that people were stepping up to the window. Foreign holders, including France and others, were saying, well, here's your USD and I'll take the gold because I can see the enormous deficits that you're running, with the guns and butter policy of Johnson as well as the Vietnam War, that you've got a 15% backing for your currency, so I'll take 100% of that before everybody else figures it out. Today we don't know how much gold is there, but the bottom line is that the dollar is not one for one backed with gold, and if they had returned to if they had a devaluation of the dollar at that time, and then gone off of this deficit spending spree, I think that the U.S. would be a much more powerful and much more stable nation. Not embarked on these wars of adventure around the world to secure resources.
Yeah, we'd probably not be so hated in different parts of the world as we are today for sending our bombers and drones and killing tens of thousands and hundreds of thousands of people in the wars that we are involved with, supposedly, to promote our way of life, which doesn't make any sense to me.
Yeah.
David, go ahead.
Yeah, just that we've gone onto a fiat currency system, and then we've also gone on to a fiat gold and a fiat silver system, and other precious metals, where they print the precious metals and trade them, and then call that the price of the metal.
Yeah.
The vast majority, you look at the obscene levels of volume in London, which is 85% of the global gold trading, it's not real. And this is why we're watching physical so closely, and we continue to see companies like UBS saying that the physical demand is not really an issue, and we have to follow the U.S. dollar fiat exchange rate versus other currencies. And
it seems to me that the argument and the mindset of most people is that gold is down because the dollar is up. And what I think they're missing is the fact that gold is down because it's an artificial market. And the dollar is allowed to stay up and to keep its artificial value because gold is being suppressed. Is that your reading of it?
Yeah, I think that this talk about raising rates, I certainly don't see a recovery, especially when you look at the labor force participation rate. I don't see a recovery in the States anywhere near what has historically happened, and we're still below the number that were employed before the 2008 crisis happened. So, I think the key here is just to observe the price of the physical and realize that what we're seeing is fiat gold and fiat silver being traded, and the discussion is about rising rates bringing the dollar up and gold down. Well, in reality, from centuries of data, the backdrop has been that Gibson's paradox says that rising gold prices force rates higher. And I think that's what's really going on. And the Fed is playing catch-up here because they can see what's happening with gold. They can see what's happening with the free trade zone of interchangeability of the yuan for gold, and they know what's they are tracking the premia and the dropping inventories in other countries as well, and they likely see that this selling and buying and selling of paper virtual gold or fiat gold is coming near its end. So their story is that rates are going to rise, the dollar is going to become stronger, and gold is going to drop. And I think it's going to be the other way around, that gold is going to go much higher. It's going to force rates up. And that's the real story. And I think that, you and I talked about UK, that their announcement last week on their bond, I think that directly relates to it as well.
Could you explain that, David, if you would, please?
Yeah, just the UK announcing that they were issuing a bond denominated in yuan, and they said it was to generate foreign currency reserves. But they've already got a swap line. They've had a swap line. I think it's $12 or $20 billion between the UK and China, and implicit in this issuance of the yuan. A yuan bond is that they could get more favorable rates, or perhaps attract the currency that they want to attract, because the yuan is a more stable currency. And I think that's the issue, is that the yuan, that it is seen now that they're moving towards a gold interchangeability standard with the yuan. And I think it's the first of many issuances to come. But in essence, I think what they're doing is issuing a gold bond.
Interesting, very interesting. So, that the UK would issue a yuan-denominated bond, which is then exchangeable into gold. It's really fascinating stuff. And so, what do you think? What would be driving the UK to do that?
Well, they have the Scottish vote coming up, and we've seen what their what will happen to their current account balance with the loss of Scottish oil as as a source of capital inflow, and it basically goes from about negative 4.5%. The current account deficit goes from negative 4.5% to negative 7% immediately upon losing those revenues. So that's one thing that it appears to be related to, and I think that it's an interesting selection in terms of what they're going to issue the bond in, because they're essentially issuing it in something which is interchangeable with gold, and that's their choice. It wasn't a USD denominated bond, but it was or a euro denominated bond, but it was a yuan denominated bond, and I think that's the exigencies of the market, not just a flip of the coin choice being made by the chancellor.
Mm-hmm. We've talked mostly about gold today, which we usually talk mostly about. We haven't spent any time on silver. And I noticed in your notes that China produces 9,000 tons of silver per annum, or roughly 30% of the global production. So they have to be the largest, I would think, one of the largest, if not the largest, silver-producing countries, and they are supposedly the largest gold-producing country as well. Do you think that China may see some silver as playing into the monetary system sometime as well?
Well, China was on the silver standard. They played around with paper currencies until roughly the 1500s, and then they went on to a silver standard. So it has a long history of money in China. I know that also it's a key metal driving their solar power industry and photovoltaic cells. It's a key constituent. But, I mean, they produce about 300 million ounces a year in country. Both from smelting of imported concentrates as well as from mining. And just seeing these plunging inventories and rising premia, they tell us that the price is not right. And a shortage in a country that produces that much silver is really quite something.
Well, it's really fascinating stuff. And again, just to repeat, the premia are very, very substantial for platinum and palladium and silver. Once again, the notes you sent me, 16.8% for palladium, 6.4% for platinum, 11.8% for silver, and silver has really been rising, hasn't it, on a fairly regular basis here. So it's up to 11.8% from 11.4 last week. Yeah, that's a $2.18 increase, or higher price than for in the paper markets.
Yeah, maybe answering your prior question in terms of silver has a history of money in China, and it's likely that the citizens see it as that still. And the government encourages people to buy gold and silver, physical gold and silver, and obviously they can see a phase change coming in the global currency system, and they're trying to stabilize their country accordingly. So the premia that you're noting there, Jay, I think are just associated with the tremendous demand. And, all these markets really are opaque. It's the World Gold Council and GFMS and all these different organizations put out the balance of flows, but nobody really knows. And I think the best that we can do is follow visible Asian inventories and to follow the prices on physical markets where they're actually trading the asset itself. And I've just begun to look very much skeptically at these paper markets in New York and London, where they just generate enormous volumes of paper, and they call it gold and they call it silver, and the metal is not actually being bought and sold, on a majority basis. So I think this is key for us going forward as this global currency realignment happens, is to watch these premia and watch the inventory levels.
No, I couldn't agree with you more. And when we hear stories, or we don't hear them in the mainstream press, but in the internet, when you find out that elites like George Soros are buying gold on the one hand and then telling people what a bad investment or what a bad asset it is to own on the other, you have to realize that this sort of disinformation that it seems to be so much a part of our society these days is really aimed at getting people to think in the way that the establishment wants us to think. And
yes.
The idea is to continue to have Americans believing that gold is a barbaric relic and there's no reason to own it, because if the opposite took place and if the price of gold started to rise dramatically when we have wars and rumors of wars and economic problems that take place and the market crashes and so forth, if gold really took off in those environments, then the masses of people would no longer be convinced that gold is a barbaric relic, and the game would be over, and I suppose it would have geopolitical ramifications as well. The ability of the United States to continue to dominate with military methods and propaganda and misinformation, as we hear from Daniel McAdams almost every week on this show, would no longer be possible, I guess. And so the establishment is trying to keep us all down on the mushroom farm, is the way I like to look at it, and it's very, very sad. But David, I want to thank you again for coming on to help us see the light, what's really going on, as opposed to the propaganda that we're being asked to believe. And, well, you know, you have all these PhDs from Princeton, Harvard, and Yale that are telling us that this is the truth, and it's difficult for people to see it otherwise. But you're helping us do that. I want to thank you again for being on the show. Anything else to add this week before we conclude our discussion?
Well, maybe just close with back to that UBS article where they were saying ignore the physical, essentially ignore the physical and follow the U.S. dollar exchange rate. And
yeah,
I would say do the inverse, follow the physical, ignore the exchange rates, and you know there is a collision happening between the virtual metals market and the physical metals market, and it's going to play out in the physical space, and I think that's where we're going to see the action. So you know, keep a weather eye on those things.
Yeah, watch the real markets, the honest ones, the real physical markets, and not the pretend ones. What I'd like to call really sort of the casino markets. For you, which way do you think gold's going to go today? You want to bet this way or that way, without paying any attention to what really is going on in the gold markets and the rest of the markets. So it's a travesty. It really is, because it's causing all kinds of problems. But you know, we seek the truth here, David, and I thank you very much for joining me again today to help us see what's really going on in the precious metals markets.
Thank you, Jay.